This is kind of a special little thing that we do in FutureSpeak now and then. We look at some deeper analysis in some individual futures, and we're going to do that right now as we look at gold multiple time frame analysis. So I'm going to put up a different chart right now. This is the gold weekly chart. It looks the same, except that I'm looking at the grid that we share with our level 4 members. And that because I want to take it down into some other momentum analysis and the intraday analysis, which I think is significant to look at. I'll just reiterate what we said, that these minor corrective periods right in here and here yielded big upward impulses. This was after a negative. It rallied 180 after a negative cycle before this. After this one right over here, you had a $300 impulse right in here. After this minor corrective period right in here, you had a $340 impulse right in here. And after this minor corrective period in here, we are projecting a $340 upward impulse to $2,000 on the gold market. Now, we keep upgrading this based on the action. We haven't really upgraded these targets. This up here is about 2010. This one right over here is about 1938. These would challenge the old high or make a high. Our monthly analysis projects even higher potentially than that. I showed that in our live event on Tuesday. And this is a very, very bullish picture, as you can see. We have not been shy about that and talking about these higher prices, and they are panning out. You can see these beautiful triangular shapes right in here that brought those breakouts. We have it very clearly now, and we are in this rising phase. It aligns with this right over here. Now, silver is off a little bit in here. You can see as it got its the minor cycles in here are lining more up with silver. So silver, even though it's in an upward impulse period here, might actually have a little dip coming in here where it underperforms. Right now, it is trying to overperform again. Silver right now is up 2.3% on the day. Gold is up about 0.6%. We saw similar action going on in the last couple of days. So silver is trying to gain some strength, and we're going to bring that silver-gold ratio back in the next couple of weeks to take a peek at. So I don't have it for you right now, but it is improving. So this is a very clear picture of gold moving up on the weekly patterns that points to a significant rise continuing. Now, this is really hard to see because there are a lot of cycles right in here, but I want you to get a picture for this alignment in these cycles right there and how clear they are. In these cyclical harmonic families, you can see that those nested periods bring you some declines, corrective periods, and when you get past them, you get these upward impulses, just like you're getting right in here right now. So now we're going to click and we're going to get over to the daily chart. Now this daily chart has momentum removed because we put that over on another chart. On the bottom here is the market condition, the option bias study. The option bias study was developed in order for option traders to get a sense for how to manage their option positions. In other words, do they want to be long or neutral or short? What is their greatest risk of being caught in the wrong direction, especially if they use iron condors or things that can, get them tested in a big way, or strangles or straddles. So we're in a period right now where the option bias indicator has been giving you these what we call P3 readings. That's the most positive reading. You could see that all in here right there as the market refused to go down. Then you got into some neutral and negative readings before it reestablished itself to be positive it is right now. So that's a very, very positive look at that. The cycle pattern in here, which was a little bit threatening right there by this reversal that proved to be false, and then moved up through these fib extensions. This target right over here was at about 1846, and we have a high here of about 1830. It still could take this move up to 1846 before this does give you a little corrective area right in here. I really want to see this test this area, pull down in here, and give a very, very great buying opportunity right there. A lot of people writing me about, well, they got out of their GDX, or they wish they had more of it, and they thought there'd be more correction, and I actually did too. I thought, it was kind of a toss-up, but remember that we put in this stronger, higher track right over here, and that is really what it looks like it's beginning to follow there. So the top of that would be about 1870, which again is a possibility right now. So we're seeing this strengthen here, and it would be nice if that chop in the dollar came in. You got a little bit of rally period in there, and that coincided with this dip in the gold market, which will then give you a, I think, fantastic buying opportunity. Now let's go to the next chart, which is momentum. So we're looking at the momentum, and we're looking at the projection oscillator in here. We'll disregard that chart on the bottom right now. There's really no signals in there. It gave a little top warning right there, which was the right spot. So we're looking at the projection oscillator and the momentum indicators. You can see when the slim ribbon gives you, and this is a slim ribbon right over here. It's on an area chart, which gives you this real clear look at the momentum conditions. Gave you this buy right over here, and that beat the spike on the upside right there. It gave you this buy right over here, and it beat that upside spike right there. So really, really nice when you look at that. The momentum in here quite strong, as you can see, and that's important. Now the next chart is the intraday chart, and this is so valuable for shorter term traders. It really gives you a very, very good sense of market condition. First of all, the askSlim market condition indicator, which is a multiple time frame indicator. There's almost nothing like that out there in the world. It looks at weekly, it looks at daily, it looks at intraday, and it gives dominance to the longer patterns. And when you see it pinned up here at the top, you know that the longer patterns are putting a huge force on the upside. And this is really super positive when you look at that. Again, a proprietary indicator that our level 4 members get. This is all of these buy signals that were coming right in here. They're essentially telling you about the strength of the market. You got a little wiggle here, which is kind of unusual. And then it took a little while before the upward momentum was reestablished. It really came right at about this point right over here, where we have the short-term trading bias labeled, and it's been strong ever since, and you can see it absolutely nailed this as it moves up right over there. So it is really ultimately so important for you to be focused on these short-term indicators in here. I'm going to open this up a little bit right over here, and I'm going to switch this over to a longer time frame just to give you an example of how this looks in a negative market. I actually need to go out, I think, a little bit further for you to see that. Let's just go out over here, and let's look at this right over here. That's this one time period where the market got really, really weak. So what happened right over here is that momentum turned negative right at this point. That's where the market was collapsing, and as it was falling with the rest of the stock market, here's where it went negative momentum right over there, and it told you that there is an issue. You don't want to be on the long side in that. You want to be on the short side. It fell from 1660-ish all the way down here to 1334. When it rallied back up here and the slim ribbon was negative, they gave you sell warnings right in here, and another big down move right over there. And then these things started to cross over in a positive way, and upside momentum forming, and it just worked spectacularly well. So this is really, really important information to look at. You can, besides the fact that the bottom is a proprietary indicator, you could just create these on your charts easily by using the slim ribbon, which is available to you clearly, and using the projection oscillator, which is available to you, and you can create these. So I thought this was very, very important analysis to show you. how you can really determine about being on the right side of the market. The 2 hours giving you fantastic information. The momentum right over here, the slim ribbon shows you fantastic information. Here are your daily cycles looking at that, which have been super powerful. And here is your weekly chart right over here, which has given you this indication of these very strong upside moves and the next one continuing. So that's a very, very clear look at the gold market in multiple time frame analysis. It shows you the depth of the analysis that we do, and that's available to you. Even if you're not if you don't get our highest levels and you don't get these charts, you can create variations of them on your own to do this kind of analysis, especially in the markets that you're the most focused in. So, I'm not trying to sell you higher levels. I'm trying to make you look at ways that you can be the best trader that you could possibly be, because that's all we really care about. Our information doesn't have value unless it improves what you're doing, and that's the core of what we're looking at, to make you the best trader that you could possibly be. So that is a look at gold multiple time frame analysis.